Trade Group, and this is your end of day, as well as end of week, as well as end of month, as well as end of quarter market review. So thanks for joining me. It is Thursday, and yes, we have off tomorrow, and therefore that this is the last trading day of March. And look at this, we're on to April, and how impressive has this market been over the 3 months? Like I feel like I don't want to talk about it too much because I guess I'm a little bit superstitious, and like the more that you kind of talk about how well something is performing, you feel like you're kind of putting the jinx in because it has been a pretty amazing market so far this year. So I'm going to recap all the performance and basically where we're at year to date. And I'll also just quickly talk about the week and basically what happened in March, which I think is really interesting to go through, like where the money's being made, where the money was being made in March, and basically like how you had to trade it a little bit too. So I'll try to kind of walk through a couple pointers with that. First things first, risk disclaimer in front of you. Everything that we're going through is for information purpose only, not giving out any advice or recommendations. And thank you for joining me again for the live stream on Twitter X. A couple other things that I didn't really do any public videos this week. The format that I kind of changed to, which I actually like because what I'm doing now is just member videos at the end of the day. So why did I make that change? Number one, it's really difficult for me to kind of do a free video at the end of the day and like not go into like all the positions that I'm in. That's not fair to members who are paying. So now what I do is for the majority of the week, and I'll probably do four. I'll kind of keep it like four videos for members during the week if I choose to do that many videos a week. And what I'm doing is basically I'm going through any names that I'm adding to my watch list, and I'm going through the chart breakdown and why I think they're interesting. And then I'm reviewing open positions, and so generally I have on for swing trading, and again it depends on the market environment, but I could have anywhere from like 5 to 15 positions on for swing trading. So I go through all of those positions basically on a nightly format, and this way we can get just a little bit more into the charts and about more into the trading, not just overall themes. Themes are important, and there's certainly something to talk about every time that I do an end of day video talking about themes. But really, I want to concentrate more on the setups and providing value to Tribeca Trade Group members. So that said, I will be running a special over the weekend. We're going to do like a second quarter special. So I'll have the pricing, and I'll send out the link for that tomorrow morning. You're welcome to email me if you're interested in that too. But we will get that. I will get that out for you tomorrow morning. So all right, so let's get to, what do I want to go through first? Let me just talk about the week first. So here's the performance that we saw for the week. And you could see there was really only two things that were red on the top line. The Qs were down 0.5% for the week. It did feel like, and this is something that I kind of hinted at throughout the week, that it just felt like more of quarter end rebalancing, where folks are, when I say folks, like funds, institutions, they just seem to be like locking in some of those profits, right? And basically how some of them function. Remember, there's funds that have all different types of philosophies, right? And some of them I think are really kind of selling some of their winning trades for the first quarter and just reallocating differently. And bonds made a big move this week, or a decent move this week, and it just felt like the last couple of days that there was money that was going into bonds. Now, again, you could argue whether they're going to be right or they're going to be wrong. It's funny that always goes on with like long short funds and funds that have high short interest. But when someone sees option flow, it doesn't matter. They automatically think it's right. But anything else, people will give their opinion on. But in any event, I just find it funny that that's the way that retail traders think. But in any event, it did seem like there was a lot of unwinding of some of those, or just maybe just taking off profits in some of those trades. Like one trade that was kind of interesting that hit the tape this week was like a huge Dash, right? So Dash has done very well this year, and somebody rolled calls, like a huge block of calls. And I had somebody say to me, "Wow, geez, they really have a lot of conviction in Dash," and I'm like, "Well, they took like $20 million in profits off the table. Now they still kept a chunk of money on the table for a few months, but they locked in. I forget what the trade was. Let's just say the trade was for $50 million, right? They took like $20 million off, so they still have a big chunk in there, $30 million, but they're taking profits, right? And it wasn't a trade, by the way. Like I think, and again, I'm sorry, I'm missing the specifics of the trade, but it doesn't really matter at the end of the day. But they went out a few months in this trade too. So it's not like they had to unwind this for April or for March end of month. But funds are making adjustments and they're making sure that they're locking in profits as they go along the way, right? And that seems something reasonable to do considering the what we've had to deal with so far. So that said, that's why I just wanted to cover the Qs were down this week. Also, growth was down, was down this week, and this week was a tough week to trade. It was very whippy. The indices were not, except for like Tuesday, we sold off into the close. Thursday we did the exact opposite, but overall we really didn't go anywhere because SPY was only up 0.4 of a percentage point. So I thought that that's what made the week a little bit difficult. Also, one of the things too that I talk about, where the money is being made, and like this is something really important, and it's something that I think traders should be cognizant of where the gains are in this market. And so I sent this note out the other day, and I talked about that, if you're trying to set up, especially like this isn't how it always works, but the majority of time, this is how it does work. Meaning if you're buying the close and putting on some trades at the end of the day, you have a much higher set probability of doing well versus coming in the day and thinking that you're going to trade the hell out of the market over the session, because ultimately this is what the market is giving you, right? If you're buying the open, right? So every day, if you're coming in and you're thinking that you're seeing these names go up in the first 10 minutes, and then you're going to put on a trade, and then you're going to sell it higher later in the day, it's very difficult when you have the majority of the days where buying the open and selling the close only earned 0.3%. This isn't on average, by the way. This is for the whole month. Buying the open and selling the close equated to 0.3%, right? And versus now, again, the S&P just went up about 3% for the month, but buying the close, right, and selling that gap open or that first move in the 15 minutes. Well, I just measure this, so I can't really talk about the strategy of selling in the first 15 minutes. This is just basically taking the closing print of SPY and taking that and averaging in what the following day was, what the open price was. If you bought that close and sold the open mechanically like that, that's where all your alpha was derived from, right? And so again, that's why I believe in going to where the money is, and that's swing trading. Now, it's not to say that you can't scalp and try to time every tick on the tape, but I think that's not where the alpha is. That's more as what's the book that the Darvis book, right? That's more for the birds, in terms of trying to do that. And again, and if you break it down further, right? So again, I'm not trying to say anything negative. I'm just trying to tell you where the gains are at. And if you break it down for like, okay, if you stick with the philosophy that you think that you're gonna like day trade the hell out of the market, there was only of which I mentioned it was only like 0.2 of a percentage point for the whole month, where if you bought the open and sold the close, where that worked. But if you, on average, you really had to take advantage of the days where you had a trending type day. The issue with that is there really wasn't many trending days, right? You had to participate in the Fed day. You had to really take a lot of risk. Like if that's what your strategy is, then you really had to do a lot on Fed day. You had to go all in, right? To basically to get, I shouldn't say all in. That's not the right thing, but that was your best day. That was the best trending day of the month. Was the day where potentially you might think that that's the most risk, right? Also, the day before that did pretty well, right? And there was a couple other days, but the rest of the days is there's one to out of 18 days. So I didn't take advantage. I didn't do this for the last 2 days of the month, but I think there's 18 days here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 out of the 18 days were negative if you went in and you bought the open and sold the close. All right. So I hope I'm getting through to you about where the alpha is in the market. Because listen, we could pretend and we could think that we can outsmart the market as much as we want to, but if you're doing that type of a strategy, and it's easier on you too, buying the close and then selling in the first, like, let's say 15 minutes, right? You could be done for the day, right? Or you could be doing your research, for the most part, like in the middle of the day, and then going from there. All right. So that's a very long-winded explanation. But so I thank you for kind of sticking it out with me, but it's important. I think most traders don't understand that at all, and they want to be day traders, and they want to try to capture like get all the alpha in between the open to the close, but that's not how March worked, and you really need a big and by the way, like, so that was March. I think what we experienced in the beginning of the year, which brought a lot of retail traders out, is there was a lot more momentum in a couple of those months. But those momentum type markets are not where it's usually going to be, are not how it works on average. On average, this is how it works, right? And again, you could Google, I'm not going to bring that chart up now, but you could Google buying the close or overnight gains versus intraday gains, and it's the same thing over years and years. And the performance is drastic that way. All right, so let me move on. That was a much longer winded response than I thought I was going to go into. Let's talk about the week's performance. So this is the week's, I'm sorry, this is the week's performance. You had gold miners, you had metals and mining, you had clean energy, you had home builders, regional banks, solar did very well, utilities. So some of these areas were not the most popular areas so far this year. So again, it's difficult, in my opinion, it's difficult to make the conclusion that that kind of performance in some things like solar, some things like the regional banks is going to continue till for the month of April. It could have just been a reshuffling. Same thing with utilities, have been one of the worst performers this year. So I think that you kind of have to have that in the back of your mind, that really I don't make too many conclusions. In fact, I think the last couple days of the month, typically for me, are the hardest trading days of the month. So, one of the things I told members this week, I said, hey, if you could try not to get too beaten up this week, then you could kind of get to next month where there's most likely on the first of the month. Typically, I say typically because there's no sure things, but usually there's new money being put to work in the beginning of the month, right? The end of the month, it's this reshuffling process, and it's funny. Some funds will literally sell at the end of the month, and then they'll go right back into buying in the beginning of the month. Again, it's just mechanics, and I bring it up so that you could try to profit off of some of these patterns that we see quite a bit. All right, so I wanted to go into, all right, so that's the week. So this is pretty interesting when you look at the month to date. So first of all, where is my spreadsheet? Okay, so let's look at this box for a minute. All right, this gives you the percentage, and I hope that you can all read that. But if you look at the percentage for the month, so inside this box, you're going to go to this column, and you're going to see month to date. SPY went up about 3% for the month, and I'll talk about my P&L too. I do that every month for members. It's funny. I have some people, like, sorry to go off tangent, but it's the end of the month, and I do that in these end of the month videos. But I get some people who will email me, and they come in and they're kind of like sticklers. They'll email me and they're like, hey, I need to see your performance over the last year, or like, and I'm like, okay, that's fine. Just, look at Google and use my Twitter address at @cfromhertz and put in front of it P&L, and you'll be able to go back and see. I think I've been doing this now for, I forget how many months in a row it's been. I think it's been 4 or 5 years where I put my performance out every month. But somebody always tries to, like, and sometimes it's the same people. They're like, "Hey, tell me how you did this month," or, and I want to know how you did 2 years ago. I'm like, okay, go right to Twitter. It's all out there for you. But I get it why people are skeptical, because not a lot of people share how they're performing. My view always is that I will always, as long as I'm running a subscription service, I will always give you the P&L, right? You should always be able to see how someone does. And if you subscribe to a service and they're just doing victory laps on pretend trades, or another fallacy somebody will do, which I think is one of the most hysterical things, is they'll give you a screenshot of their P&L when they did well, and then they won't do that for the rest of the month. So it's like, well, wait a minute. Okay, that's congratulations. You had a big day. Well, how'd you do for the rest of the month? Right? Because I'll tell you, like, this game is a lot harder than that, right? Like, when nothing is really going on, like it was this week, I find those are the hardest days. And sometimes, what you'll do is you'll shoot yourself in the foot when you're bored, right? Or you're revenge trading. Sometimes you give back those days that you had that big up day. So it's one of the hardest things to do in this game of trading is, anybody can have those big days where they screenshot and they send, "Hey, this is what I did today," right? The hardest thing is to really hold on to the gains, and especially where you have months where, even though this was a positive month, for the indices, I didn't think it was an easy month, right? And so in any event, I'll move on here, but I could tell you story after story about some of the emails that I get of people wanting, like, records of results, and there's a lot of crazy people out there. So SPY finished up 3%. Hughes underperformed a little bit, up 1.1%. And surprisingly here, like, the mid caps had a huge month. They were up 5.4%. I shouldn't say surprising, because some people really like the mid caps, but they had a huge month. And so then the small caps did very good too. I don't have the micro caps in here too, but you could see today the micro caps were up 0.75% today, right? And that didn't get much attention yesterday. It was how nicely the micro caps have been performing. Then again, that's IWC. Another thing that's been interesting too to me, and I'm not bashing anybody from ARK, but it's important to kind of understand, like what's going on here. The ARK Innovation Fund, considering all the attention that artificial intelligence has gotten and the innovation, right? It's a reminder that if on any ETF, and I do this with the home builders ETF too, right? For example, everybody knows the XHB. It's called a home building ETF, right? But there's actually very little home builders in there. I think there's like 20% of the ETF is home builders. Meanwhile, the ITB ETF, called the home construction ETF, has 66%, or like well over 60% of that ETF is home builders. So never rely on what an ETF says. You always have to do some due diligence, right, to understand what's in the ETF. And very simply, you could go and you could look at the prospectus. I'm sorry, not the prospectus. That's too boring, and nobody will do that. But you could go to the company's website. All you got to do is use that thing Google, right? If you don't have the components of what the ETF is, right? And they'll give you the top 10 on any website. It will give you the top 10 components, and you can kind of give a sense. But this is not an innovation ETF, right? The companies that are not in there, they're not innovative, right? Zoom Video is not innovative. And the other companies that are in it too. So you have to be really careful about how a manager is executing their trades, right? And again, if they were doing wonderful, then I would be touting them. It's all about performance, right? I don't have anything against anybody, and I'm not bad-mouthing anybody. But Roku, that's not an innovative company, right? And I think everybody could kind of say the same thing. And there's plenty of other names in there too these are not in the majority of these companies, they're not innovative companies, right? And then, of course, what this fund will do is instead of going with the winning trades, they'll keep buying the ones that are underperforming. And we've seen this story before. Some names just keep going down and down and down. And that's not a winning philosophy. In my opinion, is you go with what is working really well, right? So to keep like dollar averaging down into Zoom, thinking it's going to come back to 560, that's very, very poor. And in my opinion, like that's kind of like bush league trading. Um, I think most traders learn in their first year or two, and especially now that there's more resources out there, is that you don't just keep buying a name that's going down. Weakness is not a good thing, right? Strength and going up is what's important. And continuing to find the names that are going to be winners over years, right? And then, of course, understanding when the story changes, right? And that kind of brings us to like Nvidia for a second, right? I think it's important just to kind of go over this name because it is up like 80% year to date. But eventually, right, all the stories change, right? And if you've been doing this for as long as I have, you've seen names, right? I know like people were making these idiotic comparisons to Cisco, but Cisco was a great stock for years. But what happened was the company changed, the story changed. Um, Enron was a huge moneymaker, right? But if you're not following the technicals and not understanding where to sell, because you could have made tons of money in Enron, but you have to know when to get out of the company. And by the time that you actually get the news of what was causing Enron to go down, it's too late. Um, and that's the same thing with all the past winners too. Is that they all are popular for a number of years, right? And like what you're seeing in Apple right now, right? And I have nothing against Apple either, but I get a question all the time about, hey, are you buying Apple here? You know, I I may buy it like once it gets to the bottom of value, but it's clearly has lost. So something's not right with Apple, right? And again, um, all you have to do is look at this versus what the market's been doing, right? The market's been going up, 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 and up, right? And meanwhile, Apple's going down, down, down. That's to me, there's that's because they're losing something, right? There's something going on behind the scenes where people aren't buying as many iPhones. They're not as innovative. Speaking of innovation, right? That's the story why it's going down, right? And at the end of the day, like once it stabilizes and starts to go up. So anyway, I'm getting way too in the weeds. Let me get to the rest of the performance. But you'll see so here's the month. Yes, the ARK Innovation is down 4.4%. Year to date versus the indices. SPY is up about 10% for the year. It's interesting that SPY is actually now outperforming for the year. I think Qs were outperforming for a bit, but clearly with this month, SPY has overtaken Qs and now up 10.1%. And you're going to see why in a minute. Small caps, they're hanging in there. They had a good month, and they were not doing much until basically for the first couple months of the year, but now up 4.8% for the year, and the mid caps are right there with what SPY is doing. All right, growth, even though look at how much what value did this month, up 4.5% versus growth, and that's mainly on the large cap side. And growth is now up 10.7% for the year, still above what value is doing for the year. Also, month to date, value outperformed here, and growth is still up decently for year to date. TLT, the dollar, dollar was up 1% this month, and TLT was up about 0.5% for the month. All right, so that's your just index wrap up. And I wanted to go through as well because I always find this interesting every time I do it. Is looking at the month to date, and we could sort this by year to date too. But the gold miners were up 20. Look at the groups that were up over 5% this month, right? Probably not the most popular groups, right? You had energy, which had a really good month up. The XLE was up almost 10% for the month, and same thing with the other ETFs there in energy. But GDX was up 20% year to date. That even outperformed the crypto stocks month to date, which this block ETF is MSTR and Coin and Clean Spark, right, and things like that, and that outperformed. Metals and mining was up 7%. Keep in mind a good portion of that is gold miners, and the home builders continue to chug along, up over 7%. Semis, by the way, on the back of NVIDIA and a couple other names, up 6%. But if you look at the rest of the tech, right, this is something that we've been talking about for a number of weeks, is that software has lost the upside momentum. Now, we'll continue to monitor software, but with a month where the S&P was up 3% and those darlings of software were down for the month, right? Also, tech underperformed, was only up 0.6 of a percentage point. But there was plenty of other areas. Industrials were up 4%. Right. The banks, as we mentioned, financials, right, were up 4.4%. So, it really, what I tried to do in a couple of my portfolios is really kind of find where the momentum has been in this market. Again, I haven't been in every single one of the high flyers. I really didn't trade the gold miners at all this month. I did trade some energy this month, but I also have, I thought it was kind of interesting, and here's my performance for the month. Let's just bring this up over here. Right, so here's my performance for the month. Here's the indices, which I already went over. Trading account for the month up 3%. For March, I'm up now 17% year to date. And interesting, the TTG trend portfolio, which is a portfolio of 50 names, it works as in like an ETF, was up 16.3%. Now, I'm not going to show you the names that are in there, the individual names, but you could go to our trend portfolio channel, and I did put the sectors of where I've been. Notice I've got 21% in financials. So, and that kind of covers a few different groups, but I also have 6%. I actually took some profits in insurance because insurance has been such a strong area of the market. But when you add the financials and insurance, like that's been one of my biggest weights this year. And has done really well for me, as well as a couple of the other areas, industrials, 10%, right? And, and then I've got a couple other things, like I've got an infrastructure name in there, which I think is PWR is the way I classified that name, which has been, a hell of a performer. Aircraft and parts, I've been long TDW, which has had, TTG, which has been unbelievable. And I mean, so to have 50 names, so I'm really diversified. I've had NVIDIA in there, all year long. Not a big weight, but I've had it in there. I have some exposure to home building. I switched, from being long the Qs to the NDX equally weighted, and I also did the same thing with the S&P. This is RSP, which is 3%, which has done very well. I switched that up once I saw, breadth, doing very well and multiple. I didn't want to be top heavy tech, so I made those adjustments once I saw tech weakening, and that worked out. I've got some gold in there too. I've got a little bit of Bitcoin exposure too. So this strategy, and I hope that I can kind of continue to outperform, but that's really nice to see it up 17% year to date. So, right? Was that what I said? 16%, 16.3% year to date. In my performance, I think the year to date is actually 16.6% from what I calculated by end of day. So that is it for the recap. I'll just give you as well the performance. If you want to, I'll sort this year to date so that you could see where the gains are coming from. But to me, what's really helped is to have an open mind, right, and not get stuck in the same stocks, even though they're not performing. I mean, look at the semis, right? They are the market leaders, and this year they're up 29% year to date. The home builders are up 14%. Well, losing my lights. They're turning the lights off over here in downtown Manhattan. Lights are going off. The home builders are up 14%. Crypto stocks 22%. Energy's up 12% year to date. The financials are right up there too, up 12%, and does the same thing. So the areas that I've been long, are a bit overweight, are kind of right there in the middle, in terms of that. Retail is also up 9%. What's still underperforming, and again, these felt like some of the areas that were being bought this week. It was the underperformers, the regional banks, the solar, and so on and so forth. All right, guys, that's a wrap for the month. And for the quarter, I wish you all great luck for the second quarter. Regardless of how you've done so far this year, make sure that you concentrate on the road ahead. Get your trading system, your risk management down well so that you can capitalize on the opportunities in front of you. Have a great weekend, long weekend, everybody.